Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully all of you have had a very nice weekend so far. And keep in mind, all of these options are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. Selling puts is a very easy strategy, whether you're a beginner, intermediate, or even advanced investor, and provides some great ROI and some great income while not taking on too much risk. It's the same strategy that I mostly run on the channel, which has led to very nice performance over the course of this past year. We are up about 81% using mostly the wheel strategy in this account. And I'll remind you as well, last year we had a very nice year. This is a video from me just roughly about 11 months ago at this point in time, right? 11 months ago. And we were running pretty much December 28th, 74% into the end of the year. So back-to-back years of very nice wheel performance, guys. Very easy strategy to run. So in today's video, we're going to take a look at a few things together. Number one, we are going to go over the expectations for the week. How do we stand in terms of technical analysis on the SPY, the QQQs, and thereafter take a look at, do we have any possible headwinds right now in terms of macroeconomic events this week, and also possible earnings that could send the markets for a little bit of a downswing. Thereafter, we're going to take a look at some of these strategy rules that I like to look for when I'm looking to sell put options. And of course, thereafter, guys, get into the top 5 options plays of the week. And as usual, I have a ton of bonus plays for you as well. So it should be a very fun video. Let's get into it, shall we? So in terms of the expectations for the week, guys, well, we know that the SPY and the QQQ have been going on absolute monster tears, but do not forget, what goes up often does come down as well. So we've had about 12 days of rally in a row. I would not be surprised if we can get some early week pullback, just in terms of setting up for some daily higher lows for the possible daily uptrend continuation into the end of the month of December, which is usually a very bullish month for the markets. Just keep in mind, guys, the RSI right now on the SPY is clipping into the 70% range, which is fairly high. And we do have overhead resistance at this trend line, which is about 613, 614 on the SPY. This trend line has been here pretty much ever since the month of March, so it is an important one. So just keep that in mind, guys. We're getting a little bit extended now. Would not be surprised for an early week pullback, which could provide some very good opportunities to be writing some puts on some of our favorite stocks. The QQQs look largely similar, not as overbought as the SPY, but we have been coming up now hard for the last 5-6 days in a row. Any pullbacks will be looking for a higher low above 502 roughly, but we can just have that early week pullback before more trend continuation. So we are not going to chase the market this week, guys. We're going to wait for some pullbacks on our favorite names and possibly the indexes alike, which should open up some very decent opportunities. What do we have in terms of catalysts? Well, take a look. This week is fairly a bit lighter than last week, but on the Wednesday session, it's going to be the most important day of the week, of course. We get consumer CPI. Now, the expectation is about 2.7, which is above last month's read of 2.6, but unless this number truly skyrockets, I'm not really expecting this to move the markets that much. If it comes in line 2.7, even 2.8, right, would not be too bad, because we are still on the trajectory down to 2%, but quoting Jerome Powell, it can be somewhat of a bumpy path to kind of get rid of this last little percentage point on the path to 2%. So not expecting many bad surprises, but if it comes in above 2.8, like 2.9, or maybe even a 3, that could definitely spook the markets a little bit and lead to some downside, especially over the course of the Wednesday session. Other than that, though, guys, really light on the week. We only have producer inflation on the Thursday session, and not expecting any nasty surprises there as well. But just keep an eye out for any big bad beats, and you will know about these before the market opens. So position accordingly in the event that the day ends up red on that session. In terms of earnings, we don't really have many earnings that could move the market in a big way. We're largely through those now, but a couple key companies to keep an eye out, guys. Oracle is going to be number 1, and then Toll Brothers starting off the earnings season for the home builders as well. So Oracle, arguably the biggest one on the Monday session. Tuesday, we have AutoZone and GameStop, of course, for those of you looking into that one. Wednesday, we get another big one, Adobe, and then on the Thursday, should be a very big day, guys. We get AVGO Broadcom, so could impact semiconductors across the board, and another big one of consumer defensives, which would be Costco. So there are some fairly large companies reporting this week, but in my opinion, nothing that can truly move the market that much. other than AVGO. If AVGO somehow misses huge to the downside, expect semiconductors to not have the best time at all. I still think it'll be a buying opportunity on many names out there, but this could be one that does move the markets more than anticipated, more than the rest for sure. So now that the forecast is kind of out of the way, let us dive into the rules of the strategy. And I'm going to be going through these a little bit quickly because I have a 30-minute video. I will leave it down below in the description. 30-minute video explaining the details of the strategy a lot more in depth that I'm going to get into right now. And those details are pretty much how do I pick the companies that I'm going to run the wheel on? How do I pick my strike prices and everything like that? So if you want more details, feel free to click the link down below in the description. For now, I'll be kind of flying through these. So number one, you want to build a watch list similar to the watch list that I have right here. And we want to be filtering by companies that are in the red. This will make sense when I go through the rest of the criteria for the strategy, right? But you want to always filter by red. When we're looking to write puts below the market, what are we looking to do, guys? Selling a put option is basically a buy limit order that pays you. If you want to buy a stock below the market, there's two ways of doing it. Either you can just set a buy limit order down here for 100 shares, but if it doesn't get filled and the company doesn't go down there, you just don't walk away with anything. The market just runs away from you, your order never gets filled, and you don't make any money. That is where selling puts comes into play. Take a look right here. I have the chart for, we're going to use Elf Beauty for now, but I can use anything. I can use NVIDIA if you guys want. If I wanted to buy 100 shares of NVIDIA at $137, I can either set a buy limit order there, or I can sell this put option that if the market closes below there, I have to buy 100 shares of NVIDIA. If it doesn't get there and it ends above, I just get to collect the $78 in premium. It's a great way to reduce your average cost basis while still buying a stock that you love at a price that you love as well. And of course, in the event we do get assigned, we still keep the $78, whether we get assigned or not, right? So think of it as a buy limit order that pays you. So for that case, you want to be looking for stocks that are already red. That way you can write puts further and further below the current market price. Now, rule number one, guys, solid companies only. Please do not write any options on companies that you do not want to own. Do not get seduced by the premium on certain contracts that have very high implied volatility. It's a recipe to kind of get destroyed. So only ever write put options on a company that you want to own at a strike price that you want to own. High conviction, high quality companies only. If you get assigned a stock that you don't like and you end up at a loss, every day you will have to open your brokerage account and wonder why you are in that position in the first place. So it may as well be a solid company that you do not have to ask yourself that question. Number two, we want to trade stocks that are in a monthly uptrend, such as the SPY, or at least in a long-term range. You want to avoid companies that have been in an extended downtrend, such as Etsy. I'm not saying that Etsy is a bad company. I'm just saying they're in an extended monthly downtrend. You want to avoid that because we're not quite sure exactly where the bulls will decide to finally play some defense and rise this stock. So you want to focus on stocks that are on monthly uptrends. That way you know the sentiment around the stock is positive and the bulls most likely will play good defense around the big support areas. Rule number three, we want to have companies that have no earnings this week, guys. Earnings is a very easy way to lose a lot of money if you write options too close. Even if you're far away, you guys know the drill. Something that could possibly be expected to move 5-6% after earnings, sometimes they move 15 to 20. So you saw this performance chart, right? What do you guys think all of these declines are here? This one in May, this was CRM, Salesforce earnings. I got hit pretty hard with that one. I mean, it was a big week of earnings. We lost a couple of them. And I was also showcasing all these on the channel late July as well. That earnings season 2, there was a couple retail names that I chose to play. And unfortunately, I ended up, even if I was conservative, I ended up losing money. So as you can see, guys, even someone like me who has a lot of experience running this strategy, when I get a little bit too ambitious with my earnings plays, sometimes it can go the wrong direction. And if you do not know how to close your losses early and continue running the rest of the strategy with a clear head, these losses can compound and you may just not make it back. So moving forward, you'll see a lot less earnings plays from me, but I'm showing my real life example of why you should not play earnings. This is just the YouTube portfolio that I show you guys. I have another account, a much bigger trigger account that I do not do this in, right? So this one, I try to run up the ROI as much as possible just to show you guys what is indeed possible, even using less capital, but just do not play earnings as a whole, guys. You'll have a much better time. Number 4, writing stocks that are at big areas of support or breakout retest. I always bring up the chart for Autodesk. A big area of support is this guy down here. Look at all this support in price action all the way down here. It's a year and a half of support. Usually writing stocks that are writing put options on stocks that are at support, very decent win ratio probability. The breakout retest is the inverse. The breakout retest is known as the trend continuation trade. You get a breakout of a higher end of resistance range, breakout, retest, and run. Usually the retest area is a very solid location, especially if you're analyzing it on the weekly or monthly time frames. So keep that in mind. Now, number 5, you want to be writing stocks at or lower than the expected move. What is the expected move? That is very simple. It's the probabilities that Wall Street thinks that the stock can move up or down in a given week. Here you can see we have Coca-Cola up, but if you want me to do something else, we can use Nvidia, which has a bit more volatility. Nvidia right here, as you can see, the expected move for Nvidia for the week to the downside is 137.99, 3.13% to the downside. So you always want to be writing stocks, puts on stocks at strike prices that are below the expected move. Once again, it increases your probabilities of not being assigned. All of these rules increase your probabilities of not being assigned. So in that case, number 6 here, writing on red or flat days. Well, it stands to argue, guys, if we want to write puts that are below the expected move here of 138, well, you need the stock to come down into them, right? It serves no purpose if Nvidia has a massive green day on a Monday or Tuesday, serves no purpose to chase to the upside, right? We want to be below the expected move and increase the probabilities of not being assigned. That's why we choose to write on red or flat days, and why I filter my watch list by stocks that are red. Now, this next point is your ROI. We're looking for 0.5% to 0.75% in weekly premium. Now, I've been running this strategy, guys, for about the last 6-7 years, and I've tested a bunch of different ratios, whether it be delta and tons of stuff like that. The problem with only going by delta is that depending on the implied volatility of the stock, a 20 delta or 30 delta will be a lot different in terms of degrees of how far away it is from the current share price, right? So if you don't want to have to constantly look for different deltas and whatnot and adjust them depending on the IV, well, you can just use the 0.5% rule. This means that if we're always writing put premium for 0.5% in ROI per week, usually on a 52-week basis, you'll make at least 26%. In all reality, you'll make a lot more because the covered calls, if you get assigned, will make a lot more. But this is the baseline, guys. You want to be conservative, right? Under promise, over deliver. So for that reason, we go with 0.5 to 0.75%. What does that mean? Well, take a look at the options chain right here. If you're looking for the 0.5% rule, just look for half of the strike price in cent increments, right? So let's say you wanted to write the 130s, you know that half of 130 in your head is 65. You need to see 65 cents here on the bid. And if you don't believe me, we can do the math together. 0.65 divided by 130, that is literally 0.5%. So the 0.5% rule is a very easy way to go through tons of different options chains without looking at the delta. The 0.5% rule encompasses for that delta. Everything is priced in. It'll be far away enough on every single chain and always be the sweet spot, right? The 0.5% rule for me is the sweet spot between the risk of being assigned and still making good money per week. So try and stay within that range, guys. If you get too close to the stock price, you guys know the rules, right? Do not get seduced by very high premiums up here. It is too close to the stock price. Your risk of being assigned is too large. So try and stay within the confines of the 0.5% to 0.75% in weekly premium. The reason I like weekly options is because it provides the highest ROI. But if you guys want to write 2-week options, 3-week options, 4-week options, 5, 6, just try and extend this weekly premium week per week. So if you're writing puts 4 weeks away, well, it stands to argue that you're going to be wanting 0.5 times 4, which is 2% total, right? So I'm not opposed to writing longer duration puts. Matter of fact, I do a lot of them as well. But just try and stay within your weekly premium minimums to be sure you're maximizing the ROI. Lastly, we want to take profit at 90% of the contract value just to stay capital efficient. If you write these put options on a Monday morning and by Tuesday afternoon, they are 90% worthless, why would you keep that position into the Friday close? It makes no sense. You may as well just take the capital back and go shopping for a new play to be capital efficient. And then lastly, in the event you get assigned, very simple. Covered calls also 0.5% to 1% in weekly premium. So if you get assigned NVIDIA at 137, the very following week, you will write covered calls at the assigned strike price of 137, provided you're getting the minimum ROI. The only time I will write one strike price higher is, let's say we get assigned NVIDIA on the Friday session at 137 down here, right? 137, and then the following Monday, it just gaps up 3-4%. Then and only then, I might allow myself to write 1 or 2 strike prices higher just to get a little bit more of that juicy share appreciation. But overall, I would say 95% of the time, I'm writing at my assigned strike price. Those are all the strategy rules. If you want more, click the link down below for the video for the 30-minute description. Now, moving on further, guys, let's get into the top 5 options play, shall we? So stock number 1 is going to be Uber. Now, Uber, of course, last week had a very big decline. One single day, they went down almost 10% because there was a headline that Waymo, Google's autonomous vehicle service, ride-sharing service, is now entering Miami. But when are they entering? In 2026 only. So Uber might stand to lose a fraction, tiny little fraction of the Miami market. Despite Uber being an international company that operates in over 70 different countries, they were down 9.5% because of that news. But it's funny, really, when you dig a little bit deeper. You guys may remember on the channel, I literally covered this in September. Waymo and Uber this is from the Waymo website directly, guys. Waymo and Uber partnership in Austin and Atlanta, right? So Uber most likely will be the network that Waymo will use in a lot of cities across the United States, which is why it was really funny that the stock dropped that much off a headline from somebody that they're already partnered with. So in my opinion, guys, overreaction has to be a buying opportunity. And for that reason, I'll be looking to write some short puts this week. As a matter of fact, I am already in. You can see down here, I already had one when the stock was down 4 off that news. I chose to write these 66 puts. Now they are slightly in the money right now. I don't really mind. I will write even more if it comes down even lower. That being said, Uber has a very nice support area coming up down here. Roughly $60 is that next big area of support. This is the previous all-time highs from 2021 and where we kind of stopped on the Black Monday event after the Japanese carry trade blew up and took the entire market with it. So that being said, the expected move on Uber is $63.91 for the week. Let us go shopping for some Uber premiums together and see what we can find under that $63.91 for the coming Friday. So as we can see, guys, the 63s are not quite offering enough premium. 0.5% rule, half of 63 is roughly 31.5. So for that reason, we need to be seeing at least 31 cents here. Not quite there just yet. So in the event you find Uber slightly dipping again on the Monday session, that will open up these $63 puts. Now, in the event Uber drops even more towards our support zone, let's say they come down 65, 64, that may even free up the 62s, maybe even the 61s, depending on the size of the drop. You always want to be dynamic with your strike prices. These are not set in stone. If Uber has a 3-4% day to the downside on the Monday session, you might even be able to get the $60 strike. The goal is to be as low as possible in this options chain. So at a first glance for me, the strikes I'm interested in for Uber this week are 63 down to 60, depending on the size of the move down on the Monday or Tuesday session. I want to get as low as possible while still getting 0.5%, which would be roughly about 30 cents on the bid. So that is stock number 1. Stock number 2 is another one that we've been doing a lot on the channel, and that is Google. Now, granted, Google is not very close to the most recent support level, which would be arguably down here around the 165, 160 region. It's a little bit elevated. Why do I not mind slightly chasing it up a little bit and breaking one of my rules? Well, it has to be the valuation, guys. The valuation of Google is extremely cheap. I keep forgetting it's on GOG. The valuation right now, 1.21 peg. This was done at 165. They're barely higher than that. The peg ratio should be maybe 1.27, 1.3 maybe. Still the cheapest stock in the entire big tech family name. That being said, guys, or rather the big tech family, look at all the analyst price targets, largely above the current stock, and also very nice EPS expansion, very nice revenue expansion as well. This one has a little bit of headline risk, of course, because of the Department of Justice trying to break up the company. If you ask me, the probability of them actually being broken up is under 5%, but the risk does still exist. So if you do not want to take this trade based off of that headline risk, no problem at all. I'm just telling you guys which ones I will be looking at for the week. That being said, in terms of Google, the expected move is all the way down here, 171.11. So let's go shopping and see, can we find anything lower than 171.11? We may need a little bit of a drop. I will tell you guys that at a first glance. Let's go shopping real quick though. So for Uber, it'd be nice if they could bring me to the options chain page. There we go. So moving into moving into Google, as you can see at the 170 strike, which is under the 171 expected move, you can see there's not a lot of premium here. You would need to see roughly 85 cents on the bid. And as of right now, we are only getting barely 61. So what needs to happen? Google needs to drop on the Monday or Tuesday. If it does drop Monday or Tuesday, back down here into the low 170s, well, maybe you might even be able to get a better strike, either the 170s or the 167.5. I would love to do the 167.5s, but there's no premium there now. So you need to wait for a little bit of a drop on Google for that strike to open up. 167.5 would put you fairly close to where you start having a lot of support from these past candle formations back there. And even down here at the 162 is the 200-day EMA. So even if we get a sign up here at 167.5, the drawdown may not be that severe if we do get a sign, right? So that is the trade on Google. Need to be a little bit patient. And what happens if Google rallies on the Monday and Tuesday, guys? Are we going to chase this one higher and higher and higher? No, you just go shopping for another play with all the tools and the strategy that I have given you. Go shopping by stocks that are red. Now, stock number 3 is going to be NVIDIA. This also has been one that we've been running on the channel a lot, and I already have a position on this NVIDIA contract myself. I have the NVIDIA 137 puts, and I got 78 cents for them. So you can see, respecting my own strategy, I waited for the dip on NVIDIA on the Friday session. I got the premium I was looking for, the level I was looking for, so I'm happy. But I would be looking to add if NVIDIA drops more. That being said, NVIDIA right now, the expected move is 137.99. I like, guys, 135. I went a little bit more aggressive at 137. 135 down to about 125. This 10-point range here is a great level. It's the previous all-time high support, or rather resistance, which is now support. And you got the short-term moving averages, which are here as well. The bulls should be able to play defense if we come down into this region aggressively, which is why I do not think, even if we do get a sign up here, I don't think the drawdown is that much. You'd just be looking for the weekly higher lows for possible further trend expansion into 2025. Keeping that in mind, the expected move is 137.99. Let's go shopping to see, can we find the very same contracts maybe that I got, or maybe can we find even better? So let's have a look right here. As we can see, guys, below the expected move, well, the 137s I just showed you, they're paying 78 cents. Now, below that, the 136s are not quite paying enough. You'd need to see at least 67, 68 cents for it to make sense here. So that being said, guys, at a first glance, depending on the size of the move down, let's say NVIDIA comes down Monday and Tuesday, something like that, it comes down into the 141, 140, 139 even possibly, that will free up even lower strikes. So the strikes that I like this week, depending on the size of the NVIDIA drop, right, 137 down to about 133, as low as you can possibly go while still getting decent ROI for it. So be dynamic with your strikes, watch what NVIDIA does, and of course, if NVIDIA just rallies, are we going to chase this one to the upside, guys? No, there's tons of other semiconductor plays which we have access to as well. ON Semiconductor is one on Semi, this company, right? If we come down, the expected move is 64. Anything below 64, massive area of support, guys. This is like literally 2 years worth of support, decent level. I'm in NVIDIA, but there's nothing wrong with this company. You guys have seen me play this one like 5,000 times this year on the channel so far. I still like this one. AMD as well. Down here, maybe the expected move is 134. If it dumps again, you may even find some premium down here in the mid to low 120s, 125, 126, 127. Another company as well, LRCX as well. Down here, 72, all the way down to roughly 65. Decent pocket of previous resistance, support at this time, and the 200 weekly EMA at 65. So you'll see there's a ton of opportunities for your favorite semiconductor companies. So if NVIDIA is not on the table, just have a look at some of the other ones and you should be able to find some decent deals. Now, company number 4 is going to be Coca-Cola. So Coca-Cola, of course, has been coming down. Weekly downtrend is clear as day right now. Why? Well, simply because after their earnings that were not very well received, right, from here, well, then we had the election, right? It was kind of coming down after earnings. bouncing around the 200-day EMA. And then we got the Trump trade right here. And who did Trump nominate as health secretary? Bobby Kennedy, right? RFK Jr. So in that case, guys, all the names that are unhealthy food products or even companies that do vaccines, pharmaceutical companies, healthcare companies, they have been somewhat out of favor. But do not forget why one of the best investors in the world has not really sold any Coca-Cola shares in the last 25 years. And of course, I'm talking about Warren Buffett. They are a dominant, very dominant company, guys. Extremely good net margins. Coca-Cola, despite being a beverage company, because of the business model that they run, in excess of 20% margins. They are also a cash flow machine, guys. They generate a lot of free cash flow per year. And what do they do with that free cash flow? They return it to the investor in the form of buybacks or dividends, of course. And I mean, you take a look at the forecast right here, nothing wrong with the stock. All the analyst price targets are largely above. Take a look at the EPS expansion, revenue expansion as well. No secret there. Warren Buffett has done the due diligence for us. He still likes the company. I still love the company as well. Now, that being said, formation is a monthly breakout retest. Retest of what? The retest of the resistance range of prior all-time highs. Now it is acting as support, and we're coming into the lower end of that support, which is culminating in the kind of $60 level right there, which, funny enough, is the 200 weekly EMA. I'll go back on this chart. Other than COVID and last October, every single time you get close to this 200 weekly EMA, it is usually a very, very, very decent proposition to be possibly trading Coca-Cola. So for that reason, guys, I like this stock a lot. Even if it comes down a little bit lower, I will be buying more shares down here and using short puts to do that. The expected move for the week is 61.5, but Coca-Cola does not have a lot of implied volatility, meaning you need to almost be on top of the share price for you to get any decent premium on the options. Let me show you what I mean. Let's go have a look at Coca-Cola. You will see Coca-Cola, the expected move is 61.50. The closest strike below that is 61. Is there any premium down here at Coca-Cola for 61? Well, arguably a little bit, but not quite the amount we want. We need to see at least 30 cents, meaning if Coca-Cola has an additional drop here throughout the week, let's say they come down again, lower 62s, high 61s, that will probably free up the $61 strike. And if for ever which reason they have a very bad Monday or Tuesday coming down here into the 61, low 61s already, well, that will free up the God tier strike, in my opinion, which is the $60. So for me this week, it has to be one of the two, 61 or $60 strike. A very solid company, very decent entry level as well. And I would be very happy with the shares if I got assigned down there. Now, company number 5 is going to be one that had earnings last week. I'll do a two-part one for this one. Okay, so it's two relatively nice growth companies. Number 1 is Chewy. We covered their earnings last week. The earnings were fantastic. The price to sales of the company is around 1. Very solid company. They're now coming into 5 quarters of straight profitability, something they did not have for years prior. Now they are net margin profitable. They are also coming into positive EPS territory over the last few years. The company's business model is doing fantastic right now. We covered their earnings, very solid, and the valuation right now at a one price to sales is very cheap, guys, for a very solid company. That being said, the big support level down here, obviously, is around here, around the 27.25. So although it's not ready yet, if you get more follow through from the earnings, or if SPY and QQQ come down a little bit, Chewy is a fairly volatile stock. If the SPY and the QQQ come down, this one will probably come down 3, 4, 5% on a Monday or Tuesday, right? The expected move at a first glance is 30.14, but I want to be getting a lot lower than that. So let's go shopping together and see what we can find on Chewy as a whole. So let's pull up the options contracts right here. So let's go for Chewy. And as you can see, guys, well, you're not really getting much above 30, below 30, right? 29.5 should be offering about 15 cents. We're not really getting 15 cents. Well, maybe if you choose the midpoint right here. So as you can see, not quite enough premium. I really want to be getting a little bit lower. So you have to follow the price action of this one, right? It's almost ready, but a little bit more of a downswing here, and it will definitely be ready. If we come below the expected move, below 30, Monday or Tuesday, it'll probably free up, guys, the 28s, maybe even the $27 strike, which is literally just above the support zone that I've highlighted right here. So those are the ones that I'll be looking out for. $28 to $27 is my desired range. If you're a more aggressive bull, bull and you like Chewy a lot, you can possibly go a little bit higher at the 29s. Not a bad strike. But personally myself, if I want to stay conservative, keeping in mind SPY, QQQ have run a lot, but you wouldn't be surprised at this point if we get a couple days of pullback. On those couple days of pullback, take a look out for Chewy down here in the 28 to 27 range. I will be shopping for them as well. So that is company number 5. And another decent growth stock here, a cheaper one, is New Holdings, another company that Warren Buffett owns, one of the fastest growing financial institutions in Latin America right now. They've just entered their support range, which is the previous IPO price. And you can see all of this congestion that the stock has had in this level currently, right? So we're currently trading at about 12.03, and the expected move is 11.4 to the downside. If we go into New Holdings right here, and then we're going to get into the bonus plays, of course. If we go into New Holdings, you will see that last week I was able to play these with a great deal of success. Let me just pull up the Discord for you guys. Let me just go in here. Where was it? The weekly recap, right? These are all the wheel trades from last week. All of them wins, and I played New Holdings. I was patient for the dip we had on the Monday session. I was able to write all the way down here at the 11s. That is the same level I'll be shopping for this week. The expected move is 11.54. If you get a dip Monday or Tuesday, bringing you down back into there, you may even be able to get the premium at $11. I'd be looking for about 6-7 cents. I know it's not a lot of premium, guys, but it is still 0.5% in relation to the strike price that you're looking at. So this is a little bit of a cheaper one, a stock that's come down a lot, a stock that is in daily oversold conditions, could be an interesting play. So it's kind of like a duo, right? New Holdings and Chewy are stocks number 5 of the top 5 options plays. That is it for the top 5. Now let's jump into some of the bonus plays. And as you guys know, there's going to be a lot. So number 1 is I'm not going to be going over the expected move of each one of these. Hopefully I've given you the tools so you guys can start doing that on your own. This is just for idea purposes. There's nothing wrong with these bonus plays. It's just some of them are just not quite ready yet, or some of them are a little bit more aggressive than I'd be willing to put in my top 5 list, because some of them can move a lot. But I know you guys like the aggressive plays sometimes, so these will be some of these, right? UPS. So UPS, I'm actually in this one myself. I took a position last week, and we're already slightly out of the in the money, underwater a little bit. I have the 126s. I would never show you guys plays that I would not take myself, right? Put my money where my mouth is. UPS 126s. I'm in those, but the expected move for the week is lower, 123.08. Why do I like this one in this position? 125 to 120. We got all the resistance from 2018 and 2017. It'll be acting as support. We have the 200 monthly. Do you know how long it takes to establish a monthly 200 EMA? A very long time, guys. We have the 200 monthly EMA down there. And as you can see as well, look at this MACD on the monthly, guys. 2 years of downswings. Very nice. Why? Because the company was kind of impacted by cyclicality, right? I'll spend a lot of time on this one just to explain my trade. The expectation, analyst price targets are higher, but this is what happened. Big pull forward of demand, a lot of stimulus money, zero interest rates. People were shipping packages like crazy, right? And then it kind of came down as consumers got more discretionary, more discreet on their spending. But now, 2024, last transition year, resumption of growth into 25, resumption of growth on revenue as well. This is why I think with all those factors, fundamental factors, the MACD, the big support level, right? All these factors are providing some confluence, so we could just be finding a somewhat of a local bottom, which is why I do not mind positioning down here. And even if I get assigned and have to stay in this one for a little bit, at least I get to collect a very nice 5.19% annual dividend. So that is a play I'm looking out for on UPS, 125 to 120. Moving on further, another play that we can look at, guys, is Enphase. Enphase has also been out of favor. If we do come down a little bit more down here, Enphase gives some great volatility. I see a 4-5% down day on Enphase. I can probably even find some short puts in the lower 60 range, which is going to be my personal target for Enphase. Be careful though, slightly out of favor. Another one is MSTR, right? If you guys want to play the Bitcoin plays, MSTR is a decent way to do this. The way I do it is doing it very conservative. I have one trade right here. Look how far out I went. 255, but I still got my money's worth though. I got 245, almost 1% for the week. But look how much space I have, guys. You might think that this is too conservative. I can play these super aggressive if I wanted to, but if I'm respecting the rules of this strategy, I want to stay conservative. My strike is 35% away. So that is the way that I'm personally playing it. If you want to play it more aggressively, guys, and go for the premium, super closer to the money, be my guest, but I'm showing you guys how to play this in a conservative way while still respecting the strategy rules. If you don't have the money for MSTR, you can go super degen and go with the MSTX. MSTX, one of my members was writing puts down here at 55, the lowest possible strike available, and that's like a 50% drop. Keep in mind, this is 2 times leverage MSTR. Usually MSTR moves 2 times more than Bitcoin. This one moves 2 times more than MSTR. So if Bitcoin moves down 10% a week, MSTR will move down 20. This one will move down 40. You get the idea? This one can move an absolute ton. It did it right here. Look, 200 down to back to $100 in one single day. So if you're playing this one, be very careful, be very conservative on the strike prices, guys, right? And the other one you can use, of course, is BITX. This is just 2 times leveraged Bitcoin itself. And BITX, I usually like to stay a good almost 20% out of the money, which is 10% down on Bitcoin in a week, which is usually going to be synonymous with the around $50 strike on BITX. Those are how I play those. Another one is a little bit more risky, but could be a decent play, SMCI. If SMCI is a big down day, Monday or Tuesday, you usually get some fantastic premium. I've been playing it a lot, but I've been playing it conservatively. You can see this one contract here, and I had a couple contracts in the prior weeks as well. When SMCI has a down day, I can usually find some premium, 33 down to about $29, $28. This little pocket right here, the company's doing well. Their products are good. We went over their earnings. Although they had the accounting risk, they have now got the filing extension deadline from the NASDAQ. They will not be delisted at this point, so you got a lot of the risk behind us. So if we come back down here for a weekly higher low swing, I'll be looking to shop for some SMCI, but giving myself a wide margin of error. The same thing for SOXL. This is a 3 times leveraged product on the semiconductor index as a whole. I've been playing this one with success in the last few weeks. As you can see, this is 2 weeks ago. This is last week as well. I usually run 1 contract because if I get a sign, I'm going to have to DCA. So that being the case, I usually like to run the 27 to 25. If semiconductors have a big red day, Monday or Tuesday, you want to go as low as possible because you're getting some good premium, but do not get too greedy with that premium. Another possible trade is BABA. I know China has been out of favor, but Alibaba has had some fantastic, amazing, ridiculously amazing earnings. They missed revenue by a tiny margin, but their profitability was better than ever. Fantastic earnings by BABA. They're just out of favor because of the Trump trade, but that's okay. Coming back into my area of support, if I can find some premium 80 down to 78 on a little drop, I will go shopping for some BABA. Of course, there's Tesla. If Tesla pulls back a little bit, this one's more expensive, but if we have a big pullback on Tesla this week, very fast and very hard, you could find some premium down here. Maybe the 320 or lower could be an interesting location as well. Keep in mind as well, Elf Beauty. Elf Beauty is one that I'm heavily watching, have been playing it every single week. You guys have seen on the channel, right? Here is last week, we played it twice, and here's the week before. We did not play it last week, but we played it the week before that. Played it a couple times the week before that. Essentially, whenever Elf has a big dip on a Monday or Tuesday session, you get a lot of premium on this. When it has a big dip, it usually dips 5, 6, 7%. If you can find a big dip, I'd be looking to shop in the 120 down to about 113 range. This is my desired range. So if you get a big drop on Elf Beauty, look for these areas right there if you are also a person that likes this company. So those are a bunch of bonus plays that I had for you guys as well. Hopefully it gave you guys some additional ideas. And that's pretty much it for me for the week, guys. So hopefully you guys have a very nice week of trading. If you enjoyed the video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every Sunday in preparation for the next week, and also do Monday through Friday daily market recaps. And if you haven't checked those out, you should definitely do it. So consider subscribing to the channel. And lastly, guys, if you have any questions on the strategy, always feel free to leave them down below in the comment section. I'll usually get back to you guys in the first 24 hours. So feel free if you have any questions on the strategy, or you want to run a stock by me and get my opinion on whether or not it's a good stock for a wheel trade, I'll give you my very honest opinion without it being financial advice, of course. And then lastly, guys, if you want access to all the real-time trades, where not only do I run the wheel trade strategy, but you guys also see here, I have a ton of either some call debit spreads, some call options, shorter dated, leap call options as well, a ton of different things that I like to run in this trading portfolio. So if you guys are interested in receiving all of these trades in real time, the short put trades, the longer dated put trades, I mean, we got some bangers in here. We pulled forward a ton of premium on NVIDIA, $400 pulled forward in a week. $300 gain in just a week on those. We do these longer duration puts as well, 3-4 weeks out. So if you want access to all of those trades, the call options, the call debit spreads, the share swing trades, the short put trades, the link to the Discord is obviously down below. I've showed this all the time on the channel. These are all the trades since I started the Discord. The red ones are small losses. The green ones are all the wins. Obviously, past performance is not indicative of future results. These targets are assignments after which we usually always get out at a profit. So past performance, not a guarantee of future results, but I figure I should always be transparent with you guys, showing you everything since I actually started the Discord, right? And we also do private morning live streams every morning, Monday through Friday, for pretty much an hour to 2 hours worth of time. And of course, we have private videos too, a lot of stuff that I do not show on the channel in terms of strategies, more complex, more advanced strategies. And also, guys, you can ask me your questions all throughout the day. I answer really, really fast about your stocks, your options, and everything in between. So if it's something that interests you, consider clicking the link in the Discord to know more. And if not, well, I guess I'll see you back on the channel, guys. Take care. Have a great week of trading. I'll see you this week, and peace.